Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, along with Brianna Valesky, and we have Brian Shannon on the line. He's the founder of Alphatrends. Brian, how you doing this morning?
Doing well, Joel. Good morning.
Yeah, did you enjoy the long weekend, or were you in there trading S&Ps yesterday?
No S&P trade. The older I get, the more I enjoy those 3-day weekends. I used to hate them, but now I embrace them.
Okay, so tell us, you're the founder of Alphatrends. So tell us about Alphatrends and what it provides for people and how they can sign up for it.
Yeah, I've been doing Alphatrends for 8 years now, and it's a online community where we have a chat room and videos each day that discuss the markets and individual stock ideas. So we try to keep it real focused on looking for swing trade opportunities is really the focus. And then in the chat room, what we'll often do is day trade those ideas. But it's appropriate really for swing traders and day traders. It depends on, as I like to tell people, don't blindly follow me or anyone. You have to look at a stock setup and see if it's something you agree with that makes sense for your own personality. To question it and to provide feedback and education is really one of the main goals. Of course, goal number one is to make money with any service, but then I'm always interested in providing the information in a highly educational way. So we've got a good community, a lot of great people in there.
And you just made an interesting point there. You said about setting up a swing trade perspective on something, and then using it to execute day trades. And I think one thing Dennis and I talk about and emphasize on the show just over our years is that, with the changes in the markets, with the high frequency trading, the good old scalping and really short term trading has been replaced by the machines. There's just no competition for them. Have you found that you've, like, over the last few years, with the proliferation of high frequency trading, that you've kind of been forced to lengthen your time frames?
I've by nature always been attracted to the swing trade time frame to begin with. I just think you can see bigger opportunities there. Now that's what I look for, and then you have to say what kind of market environment are we in, and certainly high frequency trading really. I think the peak of them really messing the markets up was about 3 years ago, and now it's just something we have to deal with. It's there. I don't think it's as prevalent as the kind of the race to zero kind of has been won, and now they're all down at as fast as speeds they can go, wondering, well, what do we do next? And their trades are getting crowded, so they're being forced into other strategies. But it's more, the environment that the market, the market condition right now this year, and since the December low, we're really kind of just been very choppy, and it's not conducive for swing trading. We try to look for the swing trade setups, but what we're realizing is that the follow through isn't there. A lot of times we're getting these gaps in either direction, and then we have these gaps that fail, so you can't get excited about them. But so the environment currently is we're still looking for swing trade opportunities, but recognizing that the probability of them following through isn't as strong as maybe it was 3 or 6 months ago. So it's now is the time when day trading is a great skill to have. Try to kind of brush it off and realize that the swing trade opportunities just aren't as strong as they have been.
Brian, you talk about trading using multiple time frames here. So if our traders or people in the chat room, we're looking at your computer screen right now, and let's take a stock like, let's just go with the big dog Apple here. Putting the time frames together, could you just, let's say you have no position in Apple, trading up a buck 19. Could you just walk us through? I mean, not necessarily whether you take a long or short, but just walk us through the time frames that you use.
Sure. Let's take a look at a weekly time frame, for instance. We're in this huge uptrend, and that's we still have a big uptrend on the weekly time frame. You break it down though, then to a daily time frame, and look in particular at the last 2-3 months. And what you're seeing in Apple is you're seeing a pattern of lower highs and lower lows and a 50-day moving average that's flattening out, maybe beginning to decline a little bit. So we've seen peaks in Apple at about, let me just get my chart tool here so I can see it a little bit more clearly. We had the peak at about 120. Then it rallied, it declined down towards this 105-ish level and bounced up to 115, declined again. Then the sellers took control at about 112. And here we are down at 105 again, bouncing from there. But what we're starting to look like is the sellers are getting more aggressive price-wise. They're not waiting for the rallies up to 115 or 112 to take control. And the tests of support are becoming more frequent in this 105 level. So, yeah, we're getting a bounce here this morning, but really, even just for the stock to become more neutral in the intermediate term, I think you've got to see it back above 109 or so and hold there, and then to become positive, once again, you've really got to take out that most recent lower high at 113. So I kind of view it as a little bit of no man's land here, and it's possible that we're setting up for a decline, but you've really got to look at that 105 level and say, if we break below there and hold below there for a day or so, then it seems likely that support that we're seeing in 105 area will become resistance and the stock will decline further. So it's really, right now it's more, I view it as more of a day trade stock, and I'd love to get involved in the weekly options in that name in particular.
And how do you approach the weekly options? Is it something that you'll look at the charts early in the week and have some parameters, and you go in maybe trade the outright to put some spreads on, or do you kind of like to let it set up during the week and then maybe take a shot on Thursday or Friday?
Well, the good thing about Apple and stocks like that, like Alibaba and GoPro and Tesla and Netflix, Facebook, Twitter, is they've all got great ranges, and they trade those weekly options. And even if you're looking at a day trade perspective, you can often see, on the chart that goes back about 5-10 days, you can see an opportunity where it might, even in this range that Apple's in, this declining range that is the lower highs, that maybe there's an opportunity for it to gap up to 107 where it is now, but perhaps rally up towards that declining 5-day moving average at about 108.75. And I'll look for the 1 minute chart, just kind of, maybe after half hour of the day, I'll start paying a lot more attention to it to see if it's holding the gains or if it's reversing, and look for those moves where you can potentially see a dollar and a half move in Apple, and those provide for some great opportunity, even on today perhaps in Apple. So it's more just situational awareness, what is setting up currently. So they're kind of go-to names to look for. In my mind, they're the best day trades out there that don't have to have necessarily the trend alignment that is looking for a swing trade long. I might not necessarily think this is the best place for that, but I might be able to make a nice scalp long intraday. So that's kind of where I'm going with that type of approach in those stocks.
And it was interesting because when I first, I said that we're looking at your screen, you went right to the weekly and kind of to get your framework, a longer term perspective, and then you said you take it all the way down to a 1 minute. So once the 9:30, you'll go, the more liquidity comes in, you'll go to that shorter time frame for a chart to try and identify a trade.
Well, not right away, right on the open, but I mean, after about a half hour or so, yeah. But I like to. It's a common question, and that's a good point for you to pick up on. Is that people say, "What's the most important time frame to look at?" And my answer is not meant to be vague, but realistically, you have to be aware of what the bigger picture is as well. So not necessarily the weekly time frame. That's not going to help you with a day trade. But it's just good to know what the bigger forces are out there and where you might be running into a longer-term level of importance that you might not see on those very short-term time frames. So, that's pure day trading, and that's, I think, more of the environment that we're in right now. We're still finding some decent swing trades. And today we're looking at OmniVision and looking at maybe some continuation and Computer Associates. I don't even know if they call it that anymore. I'm just looking at it. It says CA Inc.
Yeah, I saw that
And the
too.
biotech.
Yep, I was
Yeah.
looking. You made an interesting comment when we were talking just before we came on to the show, and you said, I don't pay any attention to news. I follow my charts. So, where do you draw the line? I mean, if you have a big position in a stock and it's coming into earnings, obviously, that's a random walk there. Will you flatten out in a stock ahead of earnings and maybe not trading that earnings day and let things come to fruition, or will you just stick with your technicals through the thick and thin and let the news and the earnings play out?
Well, I'm aware of what I want to do is I want to be aware. I look at headlines. I want to know what's the psychology of, or what's shaping the psychology of the day. So, I'll read my morning emails that have the top 10 things you should be aware of this morning. And I just want to know, again, what's shaping the psychology. But it's for individual stocks, especially now that we're into earnings season. I think you have to be aware of, at a minimum, when are the earnings due out for the company that you're targeting. I personally don't like to hold in front of an earnings report. I've seen too many that go wrong, and it turns into gambling. If I really have a strong feeling and I just feel like I need to put a trade on, actually more of a bet than anything, then maybe I'll buy puts or calls on the stock to take a shot. But that's not disciplined disciplined methodology for a low risk, high probability trade, which is what I'm focused on. So it's be aware of what the potential catalysts are, and the news is definitely a catalyst, has the potential, but it's not always the reason that a stock moves. Or I don't know if it's a 22-year-old reporter who's on his first assignment and he got the headline right, and then he's going to inject his opinion into the news story. So I don't read the stories, but more the headlines. It's very seldom that I'll really dig real deeply into a stock. If I look at fundamentals, I want to know two things really. Are they selling more stuff? Are the revenues going up, and are they making more money selling that stuff? The earnings increasing as well? Because at the end of the day, obviously it is earnings driven, but it doesn't have to be. The news. How many times have you seen a news headline and the stock? You're sure you know what the stock's going to do, and it does the complete opposite. So I don't think that. For me, it still comes down to risk management. And being able to be aware of the headline, but not let it influence me too much that I'm taking I don't want to take my cues from the news, but from price action. So be aware, but only price pays. So that's what we have to pay the most attention to.
Okay, price don't lie. Also noticing here that you got a pretty good Twitter following here with over 54,000 followers on Twitter and 74,000 on stock twits. Do you feel like that puts like a little bit of more pressure on you? When you're putting things out in the Twitter sphere, or you just stick to your principles and put out there what you see, and if you get some kickback or whatever, that's what happens.
Yeah, that's what happens. I mean, I'm not in the market to argue with people. I'm in the market to make money. Some people want to argue and tell you why you're wrong, and if that's fine. If they want to take the other side of the trade, by all means, that's how markets are made, and I don't take any of that personally. So, when I put stuff on Twitter, I'm not saying buy here or sell there. I might say, hey, this stock has a big short position and it's got a good-looking chart. Looks good from here with a stop at this point. And I don't want people to say, okay, Brian said buy it here and sell if it goes below there. I want them to say, hey, that's a decent suggestion. I'm going to look at that trade and see if it makes sense for me. Wait a minute, Brian's got his stop a little bit tighter than I'm comfortable with. I like this story a lot, so I'm going to widen my stop, or I'm going to use this as my trigger. But generally, if I can share an idea that doesn't tell them what to do, but motivates them to think about it for themselves and maybe ask a question about, hey, I don't see what you're seeing. Could you explain further? Then to me, that's what it's all about. Is I say, people, make the trade your own. Don't just follow me or anyone out there. It'd be absolutely foolish to look at a tweet and buy a stock based on what someone tweeted. That to me tells me that if there's people that are out there doing that, they're going to realize quickly that it's a very dumb way to approach the market. It's just
A losing
no other way to
proposition.
put it.
Brian, we got a question coming out of the chat room here from Zozo. They want to know, what is your favorite stock right now?
Oh, I don't have favorites. It's whatever is in my account that's working is generally my favorite. Right now, I have potential candidates that I'm looking at. I'm actually coming in today 100% in cash. I see a market that's gapping higher, and that's starting to fade just a little bit. So I just want to sit here and be patient. I'm looking at OmniVision. I'm looking at CA. I'm looking at Celldex Therapeutics for continuation, CLDX. Oracle is starting to set up, and it's not quite there, but maybe in the next day or two it'll provide a good entry. So I'm looking at a stock like Twitter as a potential short for today. So I'm going in with a clean slate and an open mind, and I have candidates. But if they don't start trading the way that I think that they ought to, then I'll just step aside, let the market settle down. And this year so far has been a great test of people's patience. Everyone wants to start the new year with big profits and to get right in there and pad their account in January. But the market environment isn't there. The market is telling us, go slow, reduce your share size, maybe reduce your time frame, or sit in the sidelines in cash. So I don't have favorite stocks. So my favorite stock is the one that I'm in at the moment, and it's working. The rest of them are just candidates to potentially trade.
Whatever's green on the screen is your favorite one. I'd go with that too.
Good one. I like that. Yes.
Brian Shannon, founder of Alphatrends, joining us here on Benzinga's pre-market prep, discussing his approach to the markets and the very even slated one. Brian, thanks a lot for coming on. We'll talk to you again soon.
Thanks, Brian.
Great. Thanks for having me on.